But increasing your income is the number one most important thing that you can do because it solves all your problems. Understanding what we do and the problem and the solution, I'm going to put all of it together for you today. I'm going to be a little unhinged tonight. It's going to be a little different than it has been in the past because I'm going to teach you how to actually implement this process into your life. But the biggest challenge that you are going to have is getting out of your broke mindset. It's going to be this thing right here. And when I say that, I mean that we're conditioned for years and years and years to think negatively about money. We're conditioned for how to understand money, and you have to understand the game. You have to understand how to increase your income. There's only 3 ways that you could possibly increase your income. You increase the number of clients that you have, you increase the dollar per client, or you increase the frequency, which is how often those clients are coming. That's how you increase your income, and you focus on those over and over and over again, and you look at that all the time. How do you decrease your spending? Quarterly or annually, you review your numbers. You don't have to review your numbers all the time. Everybody's always staring. That whole app, Rocket Money, you should only need Rocket and see all the subscriptions. Go to those places and unsubscribe. Okay? So we have all these apps that are focused on how to decrease your spending. We have all of these ways that you can invest. Right? How do you decrease your taxes? Become a business owner. You move, right? Here's Robert Kiyosaki's Cashflow Quadrant. You move from being an employee to being self-employed, to running a business, to investing. This is what you do. You can skip this part and go right to here and become a business owner and own a business so that now you can write off taxes. When you have a job, when you have a W-2, you have no choice. You have no choice. When you have a W-2, you are immediately paying money to Uncle Sam. So you can't control your taxes at all. And then the last thing is investments. And unfortunately, we live in a world that's so easy to go on Robinhood, E-Trade, Coinbase, all these different places and invest. And there is nowhere out there that's helping you how to increase your income. Now, today's call is not about how to increase your income. This webinar is not about this. But I need you to start off here so you got the right things right. Life insurance actually has nothing to do with any of these things. And infinite banking has everything to do with all of these things all at the same time. And so I'm going to break down the concepts for you. I'm going to break down really what the situation is because I just stumbled upon this process. I didn't mean to get into life insurance. I didn't even want to. In fact, the first time that I heard about it, I said that was crazy, stupid, probably not something that I should get into. I'm 5 years old, 26 years old at the time. Why the heck do I need life insurance? And it's kind of crazy how it started because if I never hired my coach, Jeffrey Combs, when I was 18 years old, none of you would probably be here right now. And that makes me think about life and how these tiny little crazy decisions that you can make will literally change your course of life forever. Because I got started in the insurance business because I've been coaching with Jeff, and I went to one of his events in California, and he introduced me to this other guy who was making money in insurance and told me to read this book, Money, Wealth, Life Insurance. It's 53 or 61 pages by Jake Thompson. It's really thin, and it taught me a lot about the concept. And I said, this is really cool. And I started wanting to learn about it. But things happen in the world where you have to understand and see where the stars are aligning so that you can allow them to come into your life. You have to be able to see these things and hear these things and understand these things because at this point right now on the webinar, there's 5 types of people in this webinar right now. 1, 2, 3, 4. And they're all at different stages in this process. Right? And I'm calling this is something I'm rolling out right now, the 5 stages of IBC. Right? The first is really the problem that you don't even have awareness of it, right? Realization. Realization is what we're going to call it, realization of the problem. You don't even realize that money in America is a problem. Now, when I say that, you're like, obviously I know money's a problem. Obviously I know that we have credit card debt and student loan debt. We have all this debt and the national debt. But you don't really feel the pain of it or care about it for you. right? And that doesn't mean that you can't pay your bills, but you never took it personally. I take America's financial situation personally. Like, how can I solve it? How can I change something about it? So when I say problem, I mean the realization that this is a massive problem and it's something that you deserve to be attentive to. It's something that you got to take time out of your day and time out of your life to actually change. Otherwise, things are going to happen the same way they've always happened. And if you don't change, nothing's going to change. Right? That's Jim Rohn. If you don't change, nothing's going to change. So you have to change. You have to realize that there's a major problem in America. Now, if there's a major problem, every problem has a solution. And so you might go start looking for solutions. Now, unfortunately, the first place people look for solutions is the fourth step, which is investments. They start gambling. People think that this is the way that you do this, and that's not true. You don't increase your income by increasing your investments. You increase your income by selling, by trading value in the marketplace, value and service to other people in the marketplace so you can collect income via transactions. This is how you create commerce. And when you understand that you are your own enterprise, right? If you're watching this right now, say this with me. I am my own enterprise. I own a business. I am a business owner. I don't care whether you think you're not a business owner. You have to start thinking like a business owner so you can start thinking these things and feeling these things. Because you don't increase your income by increasing your investments. This is called gambling. I don't do it. Warren Buffett's number one rule of money is never lose your money. Number 2 rule is never lose your money. Number 3 rule, never lose your money. And never lose your money. Can you lose money with Robinhood? Yes. Can you lose it with E-Trade? Yes. Can you lose it with Coinbase? Yes. Can you lose it with any of the investments that most people invest in? And the answer is yes. And it's not about life insurance at all whatsoever, by the way. I was going back and forth with this guy on Instagram the other day, talking about trusts and stocks and bonds and this. I don't care that it's life insurance. It just happens to be life insurance. Nelson Nash didn't care it being health and life insurance either. It just happened to work. And it works better than any other vehicle out there. So really, you want to understand the solution is having some sort of resolution. All right, the solution is having resolution. How do you find the problem? And so number 2 is that you know there's a problem, but you haven't found the solution yet. I was at step 1 for about 10 years of my life. Right? I was at step 2 rather for about 10 years of my life. I knew there was a major problem in America financially since I was a kid. I've been reading these books. The Common Sense of Investing by John Bogle, the founder of Vanguard. The Intelligent Investor, by Benjamin Graham, who's Warren Buffett's mentor. Rich Dad Prophecy by Robert Kiyosaki, who wrote Rich Dad Poor Dad. The Changing World Order, written by Ray Dalio, who's a billionaire hedge fund manager. He also wrote a book called Principles, which is a phenomenal book. The Creature from Jekyll Island by G. Edward Griffin, phenomenal book about the Federal Reserve System. And Money by Tony Robbins. My dad had me read this book and Rich Dad Poor Dad and study money and listen to Tony Robbins on a tape cassette when I was a kid. My dad had a tape cassette of Unleash the Power Within, which is, Awaken the Giant Within, which is one of his books. And I used to listen to it on the tape cassette in my parents' room on this player that they had, because he had me listen to these things so I could start programming my mind to understand what's possible. And I knew after reading all these books that there's all these lies that we get fed about money. That the Federal Reserve System is just a cabal of the bankers and the politicians. That America, these are all the themes of each book, by the way. That America is headed downwards, and China and India are next up in line, and we might think we're invincible in America, but we are royally fucked. That Rich Dad Prophecy, that the biggest stock market crash in history is still coming, and that you need to prepare for it. The Intelligent Investor, that 99% of mutual fund investors lose money over the course of time, and Jack Bogle, that he didn't even invest in mutual funds himself. So I lived in this world. This is how I came to infinite banking, is that I was stuck here looking for the solution. I had no clue. I knew there was a problem. I knew there was a way to solve the problem. I know the Federal Reserve System's only been around for 111 years. I know that these problems exist. And nobody's doing anything about it. We just live in this acceptance. And it bothered me a lot. And I looked for other ways to do it. I started dollar cost averaging, like they talk about with stocks. I started investing in crypto. I started syndicating on loans that I was doing it. And every single one of them, I was doing everything you had to do. And in 2022, the stock market dropped and I lost money on every single one. And I said, well, I don't want to deal with losing money. And literally 6 months later, I found the answer. And I started implementing this process. And it even took me a whole year while I was a licensed life insurance agent to actually understand infinite banking. I didn't even know this book existed until I was a year and a month into being an agent. And this book, for those of you that see it, Becoming Your Own Banker by Nelson Nash, you have to understand the game. So many people don't understand the game. So you got to actually implement this in your life. How do you implement this? Get a policy. This is how you actually implement it. Is first, you get a cash value life insurance policy. Then you have to put cash into the policy, borrow the cash from the company, invest it, and put the returns into a policy. And this is the biggest challenge that I see people doing. They never get past this implementation stage. And all I need are these facts. I need to know 3 things. What's your income? What are your expenses? And what are your liquid assets, particularly starting off just with your savings? Alright, and so just to make numbers easy, let's say that your income is $10,000 a month. Let's say your expenses are $5,000 a month. And let's say you had $100K in a savings account. And this is all the information I have. If this is all the information that I have, this is how I would structure a policy and show you how to implement it. And this is typically how we structure everything. The first thing that's going to happen is you're going to have $10,000 and it's going to go right into your bank. All right, this happens already. It's called direct deposit. It happens already. This is what you do with your money right now. You direct deposit it right into the bank. Every single time. You get a paycheck? Boom. You get commissions? Boom. You get paid anywhere? Boom. Right? You sell stuff on Shopify? Boom. You sell stuff on Stripe? Boom. It all goes right into the bank. Now, on a side note, as soon as that money hits the bank, they are going to go lend it out to other people immediately. As soon as it hits the bank. And they're able to do this at a 9 times multiplier. So if you put 10 grand in the bank, they can go lend out $90K. This is how banks make money. And then they charge people interest. And they make money on interest. And the whole concept of infinite banking says, why are we allowing this process to happen? Now, up until the point that I read this book, and it really was this book where it really was this book, how privatized banking really works, that taught me the mission behind it. Because at this point I had a policy, but I wasn't using it and I didn't know how to use it. And I learned through this process that you should be putting your money into this as a banking system. Because when they're doing this and lending this money out, they're charging interest on it, and you're not doing anything with this money. What you're doing with this money is you're going to go spend it on your rent or your mortgage, or you're going to go spend it on your home. Well, that's a house, supposed to be. You're going to go spend it on your car. You're going to go spend it on clothes. You're going to spend it on food and drinks. You're going to spend it on your boyfriend or your girlfriend or your husband and your wife. You're going to spend it on a bunch of BS all the time. And at the end of spending all this money, at the end of spending all this money, you're going to have a little bit left over to save or invest. And so in this example that I gave you, what happened, all of this adds up to 5K, and then you got 5K down here to save and invest. And you're going to put that money, most people are going to just let it sit there in their account, and they really spent 7K, not 5K. And so they really only have 3K left over, and then they gamble on some bullshit, and then they lose their money and they have nothing left, it seems, because they have a poor dialogue with money. And so the whole concept of infinite banking says, why don't I, instead of these people doing this, they're going to do it anyway. Instead of that whole process happening, why don't I take my money and put it over here in this vehicle, is what I'll call it for right now. And if I put it into this vehicle, I'm going to, and the life insurance companies, the way that they work is they work on, or the ones that I work with, One America specifically, every carrier is a little different, but I'll just keep it simple. One America, they have a 4 times multiplier rule. So what does that mean? That means if this is you, and here's your policy, I would probably draw 2 options for you. One option is that you do $2,500 in base premium, and then you're max funding it with the $10K a month that you make, and this $7,500 differential is cash value. The other option, which is probably what I would sell you on, is the concept of putting $5,000 into base premium, so you can go up to 5 times 4 is 20, so you can do 20K a month maximum, and you're going to start overfunding it here, but now you have a policy that you have potential to put more money into it later. Why would I do that? I would do that because if you make 11K in a month, a year from now, you're not to get a new policy. So I'm building you in some room to grow your money more. Now, in addition to that, I would take this $100,000 and dump it in on top of that so that you have instant cash value. And this is the big thing about how you utilize this. You have instant cash value. And so now instead of $10,000 in there, you have $110,000 in there. And the way that this works is about 89% of it, let's just call it 90% of that, is going to go into your policy. If you're putting $10,000 a month into a policy, 5,000 of it is going to go to base premium. Let's do it together. You put $10,000 into the policy. So it goes in your bank, it goes in your policy. In here, 5K of it is going to go to base premium, and 5,000 of it is going to go to cash value. You can now leverage against 95% of this 5,000. Now it's a little bit less than that because of different situations, the different fees they charge on the way in. But just to make numbers easy for this call right here, 95% of 5,000 is $4,750. So now you'll be able to borrow $4,750 from the life insurance company to pay your bills. Now you might say to me, and this is what I might say to you too, is if I do this option and I only have $4,750 that I can borrow, my bills are $5,000. So I might need to actually do this option so you have a little bit extra cash or somewhere in between. However, we also are going to take this $100,000 and dump it in on top directly. And so by doing that, now you have $89,000 in cash value. You're not going to have to worry about bills again. Now you can borrow $7,000 to cover your spending, and you spent too much. You spent $2,000 on bullshit. And instead of investing or saving out of your bank account, you're saving and investing out of your life insurance policy. And so you can leverage against this asset. And when you leverage against this asset, in addition to your bills and the day-to-day stuff, you're also going to move your investing part over here and invest it in some sort of cash flowing, appreciating asset. There's 3 things I really like. One is, here's Grant Cardone Capital. I'm a tennis business coach, and I've utilized his coaching programs. It's Cardone University. I'm in his real estate club. I've done a lot of his stuff. It doesn't have to be Cardone if you don't like Cardone. I love Cardone's stuff. I love his style. If you don't like him, choose someone else. There's plenty of places you can put money into. But you can invest in multi-family real estate is really the purpose of me showing you this. And these are sexy properties. Look at these. You're not going to be able to buy these on your own. That's why I like to throw money in here, because Josh Waxman at this point right now is not going to buy a 300 unit property, not going to buy 331 units. I can't do it. 468 units. I'm not there yet. No one's going to listen to me. I got to build up to that. Now, these are all top tier Class A properties that you can put money into with Cardone. The other thing that you can invest in is your business, right? I just pulled up Facebook ads to show you, but invest in your business. All I invest in is my business. Every time that Cardone reaches out to me to invest in real estate, I ask his sales reps, hey, we're growing our office, we're getting a new office, we're spending more on marketing. Should I put my money in my business or real estate? And they always tell me to grow my business more. Why? Because increasing your income is more important than investing. Because you can invest way more and have way more potential to grow when you increase your income. And the only way to increase your income is to invest more in yourself and your business, which is number 3, which is invest in yourself. Here's my coach, Jeffrey Combs. I've been coaching with him for 11 years in March. It'll be 11 years.
Wow.
In March, it'll be 11 years. And you know what he says to me? He says, most people only hire me for 3 years. We're on the 11th year, and I had my best call with him ever last week on Sunday. And I was in Bora Bora. How many of you would take a coaching call 5 hours behind schedule at 7 o'clock in the morning in Bora Bora on your honeymoon? And I had my best call of my life. I cried, I broke down, I told Jeff stuff about my family I never told anybody before.
I would, says Kenny.
There you go. And why is that important to you? It's important to you because you are your best and highest appreciating asset. You are your biggest and best appreciating asset. We personally, me and Yaritza, my wife now, in the last 3 years, I've gone from 100K, 250K, 600K to 900K. It's a 200% return on investment every single year. You're not going to get that anywhere. I don't care if you're a master trader. Ray Dalio, one of the best investors of all time, only gets 30% per year growth. 20 to 30. I'm going to be a 200% return on investment. And this year, I'm going to be a 1,000% return on investment. Because I know we're going to go from making $1 million in revenue to making $10 million in revenue like that. And so when you understand this game, this is the flow. This is how you implement this process. And then you take your returns from your investment and put it back into this system. And you flow it back through the bank and through your policy. And so how would I design this policy? Right? Well, you want to implement this properly. You want to implement this policy, get a policy, and use it.
Because if you don't use it...
If you don't use it, what happens, Rosalinda?
You lose it.
You lose it. So many people have a policy and they don't use it. I know Kenny's on the call right now. Right? Me and one of my mentors, Josh, we helped Kenny refinance $200,000 of equipment financing, and it freed up $4,000 to $6,000 of cash flow. In a time in his business where he's growing like crazy at his gym. Go check out Self-Made Gyms in California and Folsom, California, outside of Sacramento. Kenny's an amazing client, amazing friend, and has actually taken this stage of implementing the policy. Jared Andre, who's on the call right now, has used it to pay off credit card debt. Jared, what's your credit right now? 814? Right? I believe Jared used his policy.
He's saying, yes.
Yeah? I'm a little weird, but I got all of my, every single one of my agents, I know how much money they got in the bank right now, what their credit score is at, how much debt they have. I want to know their finances so I can grow their life. I have to know this stuff. We helped Jared go from being 10, 15-ish grand in credit card debt to paying off his credit card debt, putting money in the bank so he can cover his rent to live in Miami and live the good life, and increase his credit from the high 600s to over 800 using a life insurance policy. Right? So these are all things Jared Abersano, who's at a networking event, another one of our team members, had used his policy to borrow against, and he sold a real estate property, put all of his money into a policy, and now he's crushing it. He's our top closer in the office, and moved down here to Miami, lives in the same building as me now. He implemented the process, and he uses it to pay his rent, and he uses it to pay for marketing so he can generate leads on his own to be creative and innovative. There are things that you can do where you now control your finances. Why is this important to you? Because when you control your finances, you're not paying interest to anybody else. You pay interest to your policy and yourself. You dictate the terms. No one's going to come take your business. No one's going to come take your car. No one's going to come take your house. No one's going to send you the bills of collections in the mail. You don't really owe any money in the mindset of us owing money. You owe money that has a lifetime to be paid back, and you set the terms and the time frame, and you can control all of that, and it's all tax free. And so really, problem, solution, implementation. After you implement it and you get a policy and you use it, usually most people use it in the beginning just for their day-to-day stuff. But the fourth step, integration, is when it's like a part of your you do. That as soon as you get money, you immediately go put in your policy, and as soon as you need money, you immediately take a policy loan and you pay off your stuff. Now this is for business owners and real estate investors. Let me sum all this stuff together. And let me make this a little cleaner for you guys too. So you got 10K, it goes through the bank into a policy, and you need to borrow against the policy to pay your 5K of expenses. Let's call it 2K of unexpected BS. And then you have $3,000 left over that you're not sure what to do with it. By being able to do that, now it becomes your habit. Now you can sit down every month, every quarter, every year and say, I have $3,000. What do I do with it this month? What do I do with it? 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 I have to invest it in only one of three things. I have to invest it in me, my business, or multi-family real estate. Why multi-family real estate? Go watch Grant Cardone's content. I don't have time to talk about it tonight. But and that's also like, don't even do that yet. Just invest in yourself and your business for like 10 to 20 years. Because every single time I sit down to make that decision, my business is always the answer, or I'm always the answer. Always. Always, always, always. Me or my business. Me or my business. Me or my, and they're one and the same. Like Grant said this on a video I saw the other day. It's very hard to discern what is what. And especially when you're married to your wife and you do business together. And every time you go out to dinner, every time you go home, every time you walk around, every time you do anything, all you're doing is business. You and the business become one and the same.
Be obsessed to be better every day.
Yes, absolutely. You have to be this way. So when it becomes integrated as part of your lifestyle, it becomes integrated as part of your habit. It just becomes something that you do. That every time you get paid, you move it over here, you pay off your bills, you have some unexpected shit come up, and then you have this extra money that you figure out, what can I do with it? How do I invest more in me? What courses can I take? What books can I read? What seminars can I go to? How do I invest in my business? What marketing ads can we do? What people can I hire? What can I do? Me and Rosalina had a great conversation right before this. How can we get people in our business paid faster? What can we do? What can we invest in? How can we invest in them? What can you do to improve yourself and your business? And after you have money, go also invest in multifamily real estate. I didn't mean to exit out, but these are it's in this order. 1, 2, 3. Until finally you love this concept, you become a fan of it, and it's your time to give back and share. And this is when we call this your contribution. This is when you actually go out and share this with people. Now you don't have to become a life insurance agent and sell policies, but you got to teach people about it. You got to tell people about it. You got to refer business to people. And this is not a ploy for me to get more referrals. So if you want to send me referrals, most of you have my cell phone number. You can send me referrals. But this is an understanding. When you understand how big the problem is, when you find the solution to the problem and you start implementing it for yourself, and then you start integrating it into your life, the only thing you could possibly do is contribute, is tell people about it. When you see a good movie, you tell people about it. When you go get a good outfit, you tell people where you got it. When you have a good strategy for how to manage your money, control your finances, and take back all the freedom, of your finances that you've always been giving away to the banks and the finance companies for your whole life, like I have and my dad has, because I've lived it. I have $500,000 in debt for my restaurants because my dad's been paying off the previous owners of his restaurants for 18 years because we've been swimming in debt for a long time because you always are financing stuff. The only way to go figure out how to grow and grow and grow is just go deeper and deeper into debt. Now, debt is good when you're using it to grow your business. Right? So like, I'm a fan of debt. I enjoy taking on debt. I use debt. I have 0% debt right here with Chase and Bank OZK and US Bank and two with Citizens Bank. And I have one with Truist and I have more at home. Right? But when you realize these pieces, now someone else on here might tell you that they're a Dave Ramsey fan and to cut up my credit cards. Dave Ramsey's an idiot. Actually, he's not an idiot. He's very smart because he's fooled all these millions of people. Here's his target market. 7 million people unemployed, 133 million full-time workers. Those are his target market's twice as big as mine. Because I want to target these 23 million millionaires and all of the future to-be millionaires and teach them how to use this. And unfortunately, this is not the case and not how it happens. So, that's the 5 stages of IBC. And I hope all that I cared about today was figuring out if you were at a 1, moving you to a 2. If you're at a 2, moving you to a 3. If you're at a 3, moving you to a 4. And if you're at a 4, how do I get you to a 5?